Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come.
Monday. What's up, everybody? Monday morning edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope everybody had an amazing weekend as we are about to kick off what we do each and every day, looking at the same 10 to 12 futures markets from an educational perspective. If you're brand new to the channel, do me a favor, click that subscribe button, hit the notification bell so you get the alerts when we put out new videos. Let's dive right in. So the ES this morning, we are down about 11 points. We were up last night when we did the live trading room, and that has completely reversed in a pretty strong overnight sell-off. Last night when we did our live trading room, we were sitting right up in here talking about a potential for a breakout if we rose above 29.95, and now it's actually began a pretty decent sell-off. Now, I am not overly surprised by the sell-off. Matter of fact, I think that there's a decent opportunity here for a rally off of this 29.48 by 29.55 level. I'm not a huge fan of the basing that we're putting in right here. This really makes that level a little bit less probable. So if you're not willing to take that because of that reward to risk, then I certainly think that makes sense. It's got to fit your risk tolerance and your risk plans, but we're always looking at the opposing fair price value area, and that looks like it could be a quality area of supply. So as we come into here, be aware of that is very close, and it might remove that level altogether. Same thing in the NASDAQ, right? NASDAQ, we've got the level very similar. We have a level that's marked off, but it could also look very much the same. If those levels don't hit, and if we do break through those areas of demand, I think there's room for price to fall a little bit in both of those markets. On our 4-hour chart, we are still heavily engaged in a pretty strong upward trend. We had those two high wicks which indicate weakness, and this could just be a pretty healthy pullback for an opportunity for price to move higher. So no change in trend as of yet, just a pullback this morning. Crude oil. So in crude oil yesterday, looking at it last night, my thought was, we're set for some sort of a rollover, and the rollover was primarily found because of what our daily chart looked like. And our daily chart, we have the shape that I like to see, which essentially is this move down and a pullback up. This is an impulse move and a corrective move, and so the next move would be an impulse move down. I think there's a chance that crude oil makes it down into this $48 region, and so my idea was, let's see if we get a little bit of basing before here for a potential breakdown. Unfortunately, we did not get the basing that would be required, and so I would need to look for some sort of a rally back up as a way to re-engage this trend. And so looking at some sort of a rally back up, I would go to the top of this candlestick somewhere up here. If that zone is too wide, you can go down to the 15, and looking at the 15-minute, well, you're still going to wind up with that same width of a zone because I'm looking at this little wick over wick area here. It's possible that we actually continue to fall down from here as price kind of moves from that region. We could get a little bit more basing. So if you didn't enter the breakdown, if we get any basing in here on the hourly chart, I think it's still okay for a breakdown. Gold, we actually are rallying up to the level in gold that we looked at last night as a potential reversal. Had set this area up here as a confirmation short, and price popped right through it. So now we're looking at this wick over wick level here. Stop would go certainly above that pivot, and that gold supply corresponds very well with the S&P and NASDAQ demand. So let's see how those hold up. Looking at our bond markets, we had a really nice bond level on Friday that would have met entry and has had a nice move up. We're coming into what could be a possible supply area here in the bonds just above us. And then we put a little bit of a potential breakdown area in there. So keep an eye on this area for the bonds. Once again, same thing as with the S&P in the fact that we have opposing levels fairly close where we had a bit of basing. In the Aussie, this is back to speaking about opposing levels. So last night we were in class. This Aussie trade triggered entry last night while we were in it. But my problem with it was the fact that we had this opposing level so close, and it didn't offer us a 2-to-1 reward or risk. Well, price moved into the level, moved out, came up right to the opposing level, and then we got our strong reversal. So that's where we saw the Aussie start to move down from that level. So now if I slide to a 15-minute chart, and I haven't been looking at many on the 15-minute time period, but the 15-minute chart, I think this one would make the most sense, somewhere right in here. Change that color here right quick. 67.86 by 67.91. Euro. So our euro level, came really close to our euro entry on Friday. Level's been switched to a confirmation, and then as far as a demand area, we've got a little bit of an area here after this parabolic move higher. Canadian dollar, we had a huge move up, and we have been unable to get back into our supply level, but we do anticipate that this candlestick will be retraced. And so if you wanted to try this on the way down, I think there's a breakdown candidate right now, as I think that most of this candle will be retraced. Looking at the Great British Pound and the Japanese Yen, the pound, we are getting a bit of a pullback after what was essentially a parabolic move up. Was kind of hoping that we would get another shot to get back in on this short. Once again, we're seeing a speed candle retracement occur right now, and this would be our next level for a potential reversal, although we're getting a bit of basing in front of the level. It still right now is paying a 2-to-1, but if we get much more basing, somewhere lower, it will not. And then the Japanese yen, we're rallying up into a potential supply area. But once again, we've got a little bit of basing here that will cut it to a little bit less than a 2-to-1 reward to risk. So the moral of the story really in today is, do we have enough room for profit margin in all of our positions? And I'm not sure that we do. So keep an eye on that heading into the rest of today. Remember that next week is our free preview week. Starting on October 20th, we are going to open up our live trade rooms so that you can feel free to join us, share ideas, ask questions in the open forum, and then get access to our trade feed updates and our traders worksheet. So go to tradersarmy.com, sign up for free today so that you can join us for our free preview week. That's all I have for today. If you guys have any questions, please send us an email, support@tradersarmy.com. Until tomorrow, everybody. See you soon.